Put on your seatbelts. Ladies and gentlemen, we're going to take you on an exciting ride. Since going public in 2010, the electric vehicle maker Tesla has caused a stir throughout the globe, with its stock rising more than 20,000%. Tesla's market worth is currently over $600 billion, and it has crossed the $1 trillion milestone twice. Given its stellar performance history, it's no surprise that Tesla has grown to be a favorite among investors, among them none more so than the renowned investor Warren Buffett. This video will examine Tesla's incredible rise and explain why one of the greatest investors in history, Warren Buffett, chose to invest in buy Tesla's rival. Buffett also seems to be influencing investors in unexpected ways with startling predictions about the potential value of Tesla stock in the future. Additionally, we'll examine the potential effects of some of Tesla's innovative new initiatives on the company's earnings and stock price, including as the Cybertruck, FSD full self-driving Optimus artificial intelligence robot, and Starlink project. Press the like and subscribe buttons, grab a seat, and get ready to be amazed by Tesla's power. It's no secret that an increasing number of people are convinced that, in the near future, buying Tesla stock could show to be a terrific asset. It's undeniable that Tesla stock is rising despite impending obstacles. The EV company's shares have increased by more than 20,000% since going public in 2010, easily outperforming the market as a whole. It has routinely exceeded Wall Street predictions and created millionaires out of early investors. Let's just say that Tesla's growth is extraordinary. Elon Musk has stated that Berkshire Hathaway would have made a sizable profit if it had seized the opportunity to invest in Tesla in 2008, when the firm was only valued at $200 million. Tesla's market worth is more than $600 billion today in October 2021 and March of last year. It even crossed the $1 trillion milestone. Your return on investment would have been enormous if you had bought Tesla stock. In 2008, on June 29, 2010, Tesla went public at a price of $17 per share. However, 2466 shares at a price of $0.405 each would have been yours if you had invested $1,000 in the 2008 Tesla Series E investment round. Based on the current stock price, your return on investment, if you held onto those shares until today, would be around $12,360,000. A return of more than 1,200,000% is quite an accomplishment. It's crucial to remember that investing is never risk-free, and that past results do not promise future gains. A company's stock price can be impacted by a variety of factors such as shifts in consumer preferences, competition, and market conditions. As a result, before making an investment, investors should thoroughly analyze their options. Musk has already brought up Charlie Munger, the vice chairman of Berkshire Hathaway and Buffett's right-hand man, in relation to what the businessman believes to be a lost chance for the holding firm. Musk revealed last year that Munger had foreseen Tesla's demise as early as 2009. On February 4, 2020, however, a $1,000 investment made in Tesla during the IPO in 2010 would have been about $36,000. Analysts predict that Tesla will see higher long-term growth. Its shares will be worth $6,940 in June 2021 and should yield earnings of about $7,540 by June 2022. This game is important, even though many predictions indicate that Tesla stock will keep falling. Musk's unique leadership style and the fact that his electric vehicle company is miles ahead of the competition may be major contributing factors to this. In terms of R&D and product development, Elon Musk has emerged as the most significant CEO in the world during the last few months. His fame is growing daily on Twitter, where he has about 130 million followers. Millions of people watch his tweets and messages on social media, and the media covers them all. His ambition to transform present and future transportation means have allowed Tesla, the electric vehicle manufacturer he co-founded and serves as CEO of, to achieve an unprecedented stock market rise for an automotive company with a market valuation of $622 billion as of right now. Tesla is valued more than $400 billion more than Toyota Motor, which was the world's largest automaker by sales last year. As an alternative, the business is thought of more as a tech consortium than a conventional automaker. In a sense, the wealthy CEO created Tesla's fame and authority all by himself, personifying the brand. Investors are expected to keep driving the company's stock to all-time highs as long as he is in charge. Warren Buffett is a well-known investor who does not share the high admiration that many investors have for Elon Musk. Buffett is a firm believer in researching a company thoroughly before making an investment. Nonetheless, the Oracle of Omaha opted to invest in BYD, the primary rival of Tesla in China, which, when all electric vehicles are taken into account, sold more clean vehicles than Tesla in the previous year. Wow. BYD also manufactures hybrid cars that mix electric and petrol motorization. Tesla continues to hold the top spot in the world market. Berkshire Hathaway, Buffett's parent firm, spent $232 million to buy 225 million shares of BYD in 2008. Since then, the investment has increased dramatically, as seen by the years-long rise in BYD stock Price. The billionaire has been cutting back on his ownership of BEGS for the last few months. As stated in the regulatory filing earlier this month, Berkshire Hathaway has sold over 95 million of its original 225 million shares in the company. It has also just sold an additional 4.235 million shares for a total estimated value of nearly $140 million. With 130.3 million shares, or almost 12% of the Chinese firm, the holding company is still among BEGS' major shareholders despite the decrease. In light of the fact that Berkshire Hathaway finished 2022 with a huge cash reserve of $128 billion, up from over $109 billion the previous quarter, a Twitter user asked which company Warren Buffett could invest in. Musk replied right away, suggesting that the holding company think about making an investment in Tesla. It begins with a T. The billionaire joked, "Currently, Tesla is developing a number of much-awaited new projects that should raise earnings and revenue for the business and consequently boost stock price. A few examples are the Starlink project, Tesla's FSD Optimus robot with artificial intelligence, and the Cybertruck. See what impact these projects may have on the business." First off, Tesla anticipates great profitability from the Cybertruck. It has already created a lot of hype and pre-orders because to its futuristic appearance and outstanding performance. Over 1 million pre-orders for the Cybertruck have apparently been placed by Tesla, potentially earning billions of dollars in sales. Second, Tesla wants to make its cars better at driving themselves. To that end, it is working on technologies like FSD, Optimus, and AI robots. As a result, there may be a rise in the market for Tesla vehicles since they provide safer and more effective driving experiences. Furthermore, Tesla may be able to license its cutting-edge autonomous driving technology to other businesses, opening up new revenue streams for the business. Finally, the Starlink initiative, which aims to be able to create solar-powered roof tiles and, by providing creative energy solutions, assist Tesla in growing its energy business. Tesla has the opportunity to expand its revenue sources beyond auto sales and capitalize on a market that is expanding quickly. All things considered, by increasing sales, licensing fees, and market diversity, these ventures have the potential to enrich Tesla. They can also aid in positioning Tesla as a pioneer in technological innovation, drawing in more investors and raising the company's worth even more. Comparatively speaking to its competitors, Tesla's growth and profitability are anticipated to be significantly impacted by the deployment of its AI projects. Since the company's electric car systems business grew to prominence, the value of its stock has surged dramatically, according to a new valuation model published by Cathy Wood's ARK Invest. The value of Tesla shares is expected to climb from the company's initial prediction of $3,000 by 2025 to $4,000 by 2026. Forecasts are updated by ARK Invest as a result of the widespread use of the phrase fully autonomous driving. Compared to when it first modeled the market, the business expects greater demand for autonomous ride hails at higher pricing points. This is a result of Tesla's increased confidence in its ability to develop a completely autonomous driving system while it looks into how customers value their time. Charlie Munger and Warren Buffett remained hesitant about Tesla despite the anticipated expansion. Munger claimed that BEGS was better than Tesla, pointing out that BEGS was able to hike pricing in China, whereas Tesla had twice lowered the price of its vehicles. Munger went on to draw attention to BEGS' supremacy in China, which he views as almost ludicrous considering the amount of manufacturing area that occupies a sizable chunk of Manhattan Island. All things considered, Tesla's adoption of AI and other technologies is anticipated to have a big effect on the company's expansion and financial success. Some investors, like Charlie Munger and Warren Buffett, are still dubious about Tesla's plans, though. This brings this video to an end. Remember to hit the subscribe button and give this video a high five. We appreciate your time, and we'll see you in our upcoming video.